Fast Money's Tesla showing signs of life today after CEO Elon Musk wrote in an email to employees that the company is close to its production target numbers for the Model 3. But Tesla has a very long drive ahead of it to make up the losses. Stock is down 15% in the past week and has lost half its value in just 9 months. Let's bring in Bruce Clark, lead auto analyst at Moody's. Bruce, you've got an equity threat. You've got a potential debt threat for Tesla. How does the Tesla story ultimately play out?
Well, how does it play out? Well, from our standpoint, the story was really captured in the rating, which is a Baa, which is a B3, which is a very low rating, and we've got a negative outlook on it right now. I think one of the things that's very important to keep in mind is that Tesla's got a pretty good liquidity position. After that capital raise they did, they've got about $4.5 billion of cash. We think that they need about $1 billion to just run the business, another $500 million to pay off a maturing convertible bond, and that gives them $3 billion left over. If you assume that they just burn about $500 million every quarter, that gives them some pretty long runway. So from our standpoint, the B3 rating is still appropriate, and that cash position does give them
Bruce,
a good amount of runway.
To be fair, now listen, they could maybe issue more debt, issue more equity, but at their current credit structure and income statement, you just talked about 6 quarters. That's not that long of a runway.
When you talk about a company that's really got to address a certain number of issues, production, getting the pricing sorted out, that's a pretty long amount of time. And they needed that cushion, and that's a very important cushion to have. The more important thing is to get the demand level sorted out.
What do you think about, and how do you value the contingent liabilities and the supplier obligations, which I think are extraordinary, are in the excess of a few billion? And there's certainly some argument that they've been doing everything they can do to rob from Peter to pay Paul on the supplier side. And you can make an argument that if suppliers start turning them down, they've got also liquidity issues.
If suppliers start paying them. But I tell you, having that cash on hand makes a big difference. I also think that both the markets and the suppliers will be looking very closely at what the next quarter brings in terms of delivery levels. I think that's going to be a very important landmark for them. But if they continue to have stress and continue to have difficulty, having that cushion is very important. At the end of the day, whether you're a strong company or a weak company, if you start running out of cash, that's when you run into problems. And I think the capital raise was very important, gives them a very important cushion, and having that runway gives them time to begin addressing some of the issues that people are very concerned about.
Let me ask you, at the end of that runway, 21, 22, they start to have some major maturities due.
Yes,
multiple $2+ billion between 21 and 22.
Right.
So, I mean,
there's no denying that there's a lot of risk in Tesla. We think that risk is captured in that B3 rating. We also have a negative outlook, which indicates that if they don't get some of the things addressed within the next several quarters, the rating could go down further. So there's no denying that Tesla has serious
When you look at your rating, I know you're a credit guy, but do you look at the equity at all as a reference point at least?
That's an important source of information. I mean, we try to look at all the pieces of information that have data in them. We talk with the company, we talk with suppliers, we talk with competitors. Certainly you have a lot of very important people, important smart people in the equity market. We look at their research. We have a different objective in doing that analysis, but they have some very important insight. And we'll certainly look at that, but it doesn't drive our decisions.
Bruce, it was a real pleasure to have you on. Bruce Clark. Thank you very much,
Great.
Bruce.
Thanks a lot.
You know, listen, Guy, to Bruce's point, I mean, you look at the equity as one part of reference. They've got the negative outlook on there. 6 quarters, to me, doesn't sound like that long of a runway.
No, and it didn't sound like that to Adam Jonas yesterday, who said it's basically a distressed credit now, restructuring story. And good for Tim, who's been really on this for quite some time. And in terms of where I think the stock is going, I'll say it again. The end of 2016, it was a $175 stock. That, to me, is a line in the sand, and that's where it seems to be headed.
I just think if you listen to Elon Musk, he himself said 10 months, effectively. By the way, Elon Musk, whether this letter was leaked or not, is this another form of communicating outside of your SEC requirement? I don't know. But when you say we're almost at 7,000 a week, I annualize that. Pretty simple math. That's 350,000, and that's just getting there now. And they've guided recently for 360 to 400,000. Yeah. How do you do that? And again, if you listen to Bruce, who's now gone, so I won't goodbye the guest, the bottom line here is if demand is falling off, that's an issue that they haven't even looked at.
Another huge thing for me is when you start to see these top 10 holders actually liquidating. They never liquidated before. Now they're starting to liquidate, and that's a big deal because they were carved out in cement. They were not
Karen,
liquidated.
Tesla aside, the Uber's price targets, I think there's 9 analysts that cover Uber, are 42 to 53. That's the range, low to high. The Tesla range, take out that $10 that we had the other day, is 150 to 530. If the sell side community has got a $400 gap in what they all, smart women and men, what does that tell you about the visibility?
That there isn't any, right? So there isn't any. We know that. And then there also is the question of, all right, how much time do they have? And so the debt's starting to trade really poorly. I think we have a chart here. You know, the debt is now yielding yield to maturity well north of 9%. That gets to be very expensive debt and difficult to issue new debt. So there's some who just don't think it's going to survive. I don't know why 10 isn't 0. Why does it stop at 10? It's really effectively 0, but it's a big range.
Well, maybe they can't put a 0 on there, right?
Okay.
Because that says something, right? I mean, it's 0
right.
it's a big number for having no value, if you know what I
Rallying
mean.
on
Yes.
that headline to that. I mean, again, that to me is so much the story here. When Elon Musk sends something out and lobs something out there, by the way, I don't think that even worked today, but you can make an argument it did.